So, should we buy or sell wheat? First off, read this disclaimer carefully. And do your good deed of today by liking and subscribing. Natural resources have been traded more than any other security out there. It's the original tradable thing. Grains is where you find wheat. There is an ETF. The ticker is WEAT. It is from Tecurium. Wheat is 16.6% away from the 52-week low, 35% away from the highs. So let's jump into the chart. We will look at the futures market. We can go pretty far back here on the wheat. We do see a lot of different moves. There are time cycles, but let's look at whether they are reliable or not. Well, there is some reliability to the time cycles. And the key thing at the moment is definitively this key moving average, the blue 100-week moving average. It's been rather solid as a support level. There is a bit of a cluster around it. We did stop cleanly at the moving average, so I do think that from a bullish perspective, this looks interesting. It's an opportunity. What annoys me is that the previous time we found support there and you bought it, you would be rather frustrated. Eventually, it played itself out, but you would potentially be shaken out below it there. So let's say that you bought the blue 100-week here. You have a gain. You would have to accept, in this case, actually, yeah, 4.5-ish% loss. But then you would have a gain. But it is a key moving average. On the daily data points, we are below all of the moving averages. So in this case, you do have some horizontal support levels in play. Let me just draw that in. So there is a bunch of support here, but it's not super clean. Now let's look at these other indicators like this. Yeah, so on RSI, especially, we are at a level that has a bit of a tendency to be bought, but it's not squeaky clean. It's not like a no-brainer buy. On the daily data points, we see something similar. There's been quite a few times here back in 2022 and also 2021 when this RSI level was basically support. But during these, problematic times, we can get go pretty much lower. Yeah. In my notes, I write 100 weekly moving average support. I give the bulls a 6. So it is better than what Qatar got, but I don't like the noise that we saw the previous time we tested the 100 weekly moving average. It did eventually work out pretty well, but it can be a noisy level. Let's look at the seasonality. So to the right here, the red is the last 10 years, blue the last 7, green the last 5. So over the last 7 and 10 years, the seasonality is pretty good actually into later December. But in green over the last 5 years, there usually is this dip here in early December before the strong seasonality comes. To the left, over the last 5 years, so both November and December tends to close higher than it opens, 60% versus 50%, but on average, the gain 2% for December, 0.5 for November. The last 10 years, November is pretty decent, but December, it has some noise to it, and that's something we also see over the last 10 years, and also blue here, the last 7, it usually is some give back in later December. The last 20 years here, so December usually produces a gain, and November is one of the stronger months. We are still in November, we are at support, so it's definitively some interesting seasonality. I think I will give the bulls a 3 here. It's bullish seasonality, but it's not like super strong. It's not something to make a huge deal about, but yeah, it is more bullish than bearish. On the fundamentals, I will give the bulls a 5 here. I think that grain prices, in all likelihood, will be meaningfully higher in the future, and that is related to Ukraine. It is considered, the breadbasket of the world, and I think it will take quite some time. There will be disruption in the grain market for a long time to come, and that will lead to higher grain prices in all likelihood. Here I am looking at wheat against the S&P 500, 61% long-term positive correlation. Against the wheat ETF, we do have perfect correlation. We do see here that there's a 91% against the agriculture ETF, DBA, and 44% here with the dollar index. Short term, we are at 23% against the S&P 500, almost perfect with the wheat ETF, 93% with the agriculture ETF, and minus 64% with the dollar index. So the strongest correlation we do get is with the DBA, the agriculture fund. So we start here with weekly data points. Yeah, in this case, we have a bit of a mix between what is it? It's sort of like a head and shoulders pattern, I guess. It also is a bit of a rounding top pattern, but both are, a bit bearish. Yeah, clean resistance here from the purple 20-week moving average. Very easy for the bears to short. On the dailies, the blue 100 daily moving average is a key level, and also the green 50-day moving average. So there is some bearish pressure. The interesting thing here is this blue 100-week moving average, which is rising, and that is a potential helping support level on the horizon. Here, looking at RSI and PPO, we don't have like super clean signals on the dailies. It's a bit noisy. It's a bit noisy indeed. What is interesting here is when you look at the accumulation distribution, you do see something a bit bullish here. There is a bullish divergence. Here is a wheat against the agriculture ETF. Do I see time cycles? Let's have a bit of a look. Yeah, there's been some recent time cycles, but looking longer back, well, further back, we don't have super loud signals. We are emerging here from an interesting level on the RSI, but not a screaming buy level. So it's a bit, there's some noise here as well. When we look at seasonality, we usually see some weakness into early December, but that is when the seasonality gets pretty strong, with wheat outperforming broader agriculture into early February. I think I will give the bulls a 6 here on relative performance. Definitively, the seasonality is pretty darn interesting. We end up with a 5 in favor of the bulls. We are at 100 weekly moving average support here as well. All in all, there's more reasons to be bullish than bearish. So we do have some time left to run through some charts. So let's run through some charts that are related to grains. So let's look at Tractor Supply Company, TSCO is the ticker. We have seen a strong rally in this case. It's one of those, I wish I was a part of it. Here again, daily data points. The bulls are in control, but we are right about to test this prior fail level from the 28th of October. Not really that interesting. Really not. So yeah, let's look at some other companies. So when I think about wheat, I also think about Kellogg's. Well, about grains, I guess. So here is a Kellogg company. Very erratic chart. I do see some time cycles that might be of interest. Yeah, it's something around here. There are time cycles for Kellogg's. recently bounced from the green 50-week moving average, but when you look at the wick, we went significantly below. So it's a noisy. Yeah, also on the 200 daily moving average in red, it's not really. I mean, there are some moving averages that work for Kellogg's, but it doesn't have a clean relationship with them. Yeah, so it looks bullish here for Kellogg's, but it's a noisy one. Thankfully, there is a dividend. On the topic of oats, well, on the topic of grains, we do have oats. Here is Oatly Group. Yeah, this chart looks more bearish than bullish. Indeed, all-time low, new record for Oatly. I have tried Oatly. I think it's pretty good here on the daily data points. I mean, you could make a case that maybe just maybe this right here is a potential double bottom. What I don't like about this double bottom is that the last day, the wick tells something. Oh, we went lower. We closed higher, but we did explore further south. Danger. Very oversold here, going to the daily data points. Yeah, we are not at like a dangerous level yet here for the bulls. Oh, interesting. Looking at accumulation distribution, we do see some bullish divergence. I mean, I'm not going to say Oatly is a screaming buy. I mean, the stock is at $2.45. Well, it's at $2, frankly, at the closing price. I think I'm going to have a look at Oatly next week. This looks buyable as like a spec. As like, okay, I can buy the stock now, and sometime in the future, I think I have a decent possibility of actually closing with a gain. When I think about oats and stuff like this, like Oatly, I think about where do I buy it? Maybe I buy it at Walmart. And if I bought the Walmart shares, I would have a pretty nice gain. The problem. We are right at a prior. Okay, that was not the best drawing. Let me do it like this. This is a failed level. It just is. That doesn't mean we cannot get a breakout. A breakout would definitively be bullish. But ever since way back here in August of 2020, shorting this level has made a lot more money than going long. Let's look at the dailies. I mean, a very strong rally. Let's look here at the weeklies. We are at a pretty dangerous level on RSI, pretty shortable. Also, the PPO, especially the purple PPO, the 20-week PPO on the daily data points. Yeah, we are playing with fire here and looking at accumulation distribution. Even though the price has gone higher, we see a bearish divergence here. So it's not the big fish that have pushed this stock up. That's interesting. And for Walmart to make a new all-time high is actually way more difficult, than smaller companies, because market cap here is more of a big deal. For Walmart to double in market cap, that's a huge deal. But for a tiny company to double in market cap, and meaning the investor makes 100%, not a huge deal. So basically, for Walmart now to break out, they need very good news. Let's have a bit of a look at Amazon. I recently made some nice profits on Amazon. So what I did, I bought around here and I closed out that week. Based on the seasonality, especially of November, which is very bullish for Amazon. We have now lost a lot of it. So I think that we are back to an interesting level. You could make a case. And I bought it at horizontal support around here. I looked back. So it's an interesting level for Amazon. Direction, they have recently made it a lot easier to be short stocks. So you now have these ETFs where you can go bull or bear Apple, Amazon, Google, Microsoft, and Tesla. So that's fantastic, because shorting stocks, it's you need to borrow the shares. It can be a bit of a messy process, but yeah, it's much easier now. So yeah, Whatever you do, of course, you definitively want to join the newsletter and you want to like subscribe here and have a great week ahead.